Time to search the waiver wire. That's some authentic fantasy football gibberish that means trying to pick up some bargains. Players not signed by other teams that have turned out to be interesting prospects. Or maybe they've been cast off and they shouldn't have been. It's time-honored tradition, especially in a game where wide receivers get banged up pretty regularly. And as you can see from your screen, that's been the case both in the NFL and in stocks since football season began. Hey, even tight ends are starting to go down. So let's go hunting for some new wideouts and tight ends to augment your lineup. I'm liking some that we picked last week. Wow, Okta, ServiceNow, Salesforce.com, especially since they've spent days getting hammered as part of this market-wide rotation. Although Salesforce bounced nicely today, I think the rest are about to have a bit of a run. But how about some new wide receivers for our fantasy stock football team? Some ones that have been left behind. Let's start with Starbucks. This one's been down. Excuse me. This one's been down and out ever since management allegedly guided down numbers last week. Now, I have parsed every single word that they said at that Goldman Sachs conference where all this came out. And you know what? I come back with this. The company's operating income growth model is intact. The issues that brought the stock down last week were below the line, and they were tax-related largely. I know CEO Kevin Johnson took some heat for not disclosing the stuff when he was on Mad Money recently. Oh, give me a break. It was purely a bookkeeping matter. What really is important is the growth rate was left unchanged. What about that Securities and Exchange Commission issue with the SEC questioning their accounting practices, a story that pulverized the stock yesterday? Look, you know, there were 200 other companies that were flagged. It was a routine inquiry about an industry. Only Starbucks made the headlines. This non-story also hurt others in the restaurant industry, including Chipotle and McDonald's. But it was a nothing burger, plain and simple, which is why all three of them started rebounding today. For our second new wide receiver, you know what? I'm going to go with VMware. Yeah, I think Sanjay Poonen, the chief operating officer, I think made a ton of sense when he came here last night on this show. And he talked about how the company's recent acquisitions, which I was questioning about, Pivotal for containers and Carbon Black for cybersecurity, would be great additions. Now, I have been skeptical given that Pivotal seemed to be a cast-off from VMware's parent company, Dell. But Poonen changed my mind. I also believe the Dell-CrowdStrike relationship will be severely crimped by the Carbon Black deal. No wonder VMware rallied more than $1 today after jumping $5 yesterday. Wow. Finally, after parsing all the comments we heard from last week from Doug Merritt, he's the CEO of Splunk. I believe you're getting a chance to buy that one at an incredible bargain. Splunk's a premier data analytics play that helps the clients harvest actionable insights from machine data. Hey, listen, that's the garbage of the digital world. Oh, and in a world where Salesforce.com was willing to buy Tableau software, I think if this thing just stays here, Splunk could make a lot of sense as a takeover target because big data has such a bright future. Splunk's for real. And this stock market's acting like it's fake. Two other potential waiver wire grabs, Shopify and Chipotle. Shopify, which helps small, medium-sized businesses build out an e-commerce presence, just made a terrific acquisition, make it even better for them. They shelled out $450 million for 6 River. It's a fulfillment expert that can give Shopify customers the ability to offer delivery that rivals Amazon's. But the stock's in a downtrend. It's now given up 70 straight points. And who knows when it will find a bottom. Maybe that happened today. Stock was up a quick $10. As for Chipotle, when you're the number one performer in the S&P 500 and you hit a wall for no good reason other than rotation, it's bound to scare people, who then go on to foment reasons for the decline. But there aren't any. Chipotle's just been too hot in a market where Wendy's gets hit on starting up a breakfast and McDonald's gets hit because it competes against Wendy's. Oh, and of course, they also got caught up in that so-called SEC comment inquiry. The same inaccurate story that caused Starbucks stock to get slammed. Not only is there nothing wrong at Chipotle, its business seems to be accelerating, thanks to new menu items and very effective advertising. Look, when you get a chance to buy the best of the best down almost 10%, that's like stashing a wide receiver over a bye week. I know it can still go lower, but Chipotle's one of those crazy stocks that actually gets cheaper as it goes down, just like the rest of these waiver wire gems. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.